investment and speculation. So the first thing they say is time horizon. We got this from the U.S. Global Investors. So if you have an investment is long term, saving for the future. Now I have a problem with that sentence, and I'll get to that in a minute.
Yeah.
Speculation generally a short timeline of less than 1 year. Level of risk moderate with investment, high with speculation. Investor attitude with an investment is cautious and conservative, and aggressive when it comes to speculation. Decision criteria. So investment is based on fundamental and basic factors. Speculation is based on technical charts, market psychology, and individual opinion. Some examples according to this matrix of investing are stock market, bonds, mutual funds. In terms of speculation, options, foreign currency, and cryptocurrency. So if you guys can see that, make sure you give us your feedback on that little matrix, and we'll bring it up again before this episode is over. I just want to start, with that there. Before I give you the floor, Core, I just want to say my problem with that first sentence is I believe that it's not just investing and speculation. I think savings is a whole separate category outside of investing and speculation. So I would put saving in its own category, right?
Saving
is money that you need. Yeah, saving is money that you need, right? And it could be, short-term or long-term, but you're saving for something specific. And that's more about the preservation of your capital as opposed to the growth of your capital, right? So understand that when you have a savings instrument, whether that be a CD, a savings account, I don't care if you have Ally or whatever, most of the time you're not even going to beat inflation, but what you do have is security. So the higher level you go up in terms of with your money, the more chance you have of losing it, but also the more chance you have of gaining. All right. So let's just start off with that saving is something separate from investing as well as speculation. Because I hear a lot of times people say, well, I'm saving money in my 401k. Are you investing money or are you saving money? Because it's not the same thing. Or I hear people, I'm investing in options.
Your access to that money is the difference between saving and investing when you're talking about a 401k. So with your savings, you want to have instantaneous access or near instantaneous access. Whereas with investment, sometimes your investments don't have that instantaneous access. You can't go to the ATM machine and swipe and come up off some of that, that investment money. But if it's in bricks, then it's going to take you a while to break it down so you can get that money out of the bricks. Mm-hmm. So depending on what kind of investment it is, and the liquidity of that investment will say how, whether it's savings or investing or some other instrument. Liquidity has a lot of things to do with it. And that's one of the things we teach in our class too, because liquidity is super important. And that's something that most people don't talk about. The liquidity of your investment is super important.
Yeah. And so understand what liquidity is how soon you can get to your actual investment. And, we're talking about
it's turning whatever asset it is into money. How fast can you do it? So that's all liquidity is. Don't try to overcomplicate it. Whatever asset you have, how fast can you turn that into money?
Yeah. Understood, right? So then you have investing, right? So my question to you is, and we talk about specific instruments. This is where it gets interesting to me, because depending upon who you talk to, they put certain things in a class of speculation versus investing. When I think of investing, I think of real estate. I think of the stock market. I think of art. I think of precious metals. But the interesting one to me is cryptocurrency. What bucket would you put cryptocurrency in?
It's a store of value, and it's also so because you can store value in crypto, I wouldn't necessarily say it's speculative. So I would put it more in the savings investing bucket than in the speculation bucket. But there is speculation involved in there.
And I guess it also could, depending upon what coin you're speaking of, right? So different coins can fit in different buckets. If you're doing one that's tied to the USD, then I guess that would be more of like a savings, right? So let's assume we have three buckets here. We have a savings bucket, investment bucket, and a speculation bucket. And one of the great things about this conversation is when you get to talking about things like stock options, which fall under the speculation bucket, because there's a lot of people out there trading options and a lot of people are successful. But understand that you're not investing, you're speculating. And I'll say something that it pisses people off when I say this. 95% of the people that are trading options probably shouldn't be doing so. And I say that because now it's okay that everybody right now is on their wave and they're making money, but as someone who's been in this game for a long time, I understand that most people don't do the homework or the necessary work that it takes to be an options trader. And you're going up against institutions and individuals who do this full time and who have machines and people who are working nonstop. So in but with that being said, I think that everybody should be saving and investing in those two buckets. Not that you can't get to the other bucket, but just understand that if you're going to be in that bucket, it takes a lot of work. You can't just whimsically just say, "Hey, I'm gonna read this one book or do this." Either you're going to be doing it or you're not going to be doing it. You know what I mean?
Yeah, you got to pay attention to your money, especially in options, because the thing about options is that in you're speculating on price movement. So you're speculating on, and there's lots of factors that affect the movement of a price of a stock. And so when you in the market, you have to know what those factors are, or you're gonna consistently lose your money. And so a lot of people don't know what the factors are that make the companies that they buy move, and that's even with their long-term investments. And so,
That's a great point.
you got to know, you have to know what affects those things. And so when we're talking about, when we were talking about with this show, we wanted to talk about speculation versus investing. Time horizons are super important in both things, right? Because what I see with a lot of traders is they don't get themselves enough time to be right. So,
Okay.
so that's the other thing. They in a rush to get the money and they don't get themselves enough time to be right. So, they be buying because it's cheaper. They like to buy closer to the expiration date. They like to buy closer expiration date. Number one, you make more money, and number two, you you know, uh, it it's a rush. You know what I mean? Like they get
Yeah.
that rush of making fast money or losing fast money. Like that's gambling. Like if
That's a whole other bucket, right?
yeah,
And
that's
for everybody,
gambling.
everybody there watching, give us your opinion on this conversation about speculation versus investing and your experience and or understanding of the difference. Because
Yeah,
one of the
because I
things
know.
that
Yeah, I'm sorry. Before you start, I know a
Mhm.
lot of traders that day trade and are very good at it, and use close expirations because they put the time in and the work in. And then I
Mhm.
also know a lot of new investors who do this, who are buying these closer expirations and have no clue what they're doing, and they get lucky. The worst thing that can happen to a new trader is to make money on their first couple trades.
Man, listen.
Like,
Listen, and I can say that from experience because if first of all, if you're any sort of successful trader, if you haven't blown up an account, you're not really a successful trader. That's why another reason why I laugh at some folks because you're quick to show us your wins, but you're not going to show us your losses. And if you're worth any your weight in gold, no pun intended, but you'll have some losses and you'll blow up an account. But the point I was getting ready to make is I was having a conversation with our brother Malik this afternoon, and we were talking about the fact that people's people don't like to hear the truth. And the truth is, when you talk about investing, it's not a get rich quick scheme. So a lot of people like read things online and they see a lot of these quote unquote gurus and they're looking for the next penny stock or the next big thing or the next IPO or the next this and the next that. And they don't learn the fundamentals. And essentially what they're looking for is a lottery ticket, right?
yeah,
So
yep.
what happens
I was
is,
just about to say that. Like, I can see why the lottery is so popular. I can see why the lottery makes the money it makes, because being in the options and investing game, I can see why the lotto was so, and what's crazy is I am super aggressive,
yeah.
and I'll be looking at people. I'll be like, man, but I put in time, effort, work. I study. So
Mm-hmm.
what looks like aggression to other people, to me, just seems like the right thing to do because I done did the numbers. I did the math. But for most people, they just out there willy-nilly buying stuff without having put in any work. And it's like, yo, like that's if you're gonna do that, you literally might as well pay the lottery.